How you doing, guys? Welcome back to the channel. Today I want to talk about a very interesting stock. The ticker is TAL. That's a Chinese online education stock. Now the reason I picked this one is because they already dropped like 60 or 70% in the past month or two. Now I'm asking myself if that's the time to buy. So I want to share my thoughts over here. Of course, that's not a financial advice, but let's talk about it. Just to give you the format about the video, I'm going to introduce the company and the business model. I'm going to talk about their financial highlights, and I'm going to compare them to other educational companies so we can come up with some kind of a price target to this company, and that's about it. Let's start. So TAL is a teaching assistant platform, which means children from kindergarten to 12th grade can use this platform to further learn after school if they wish to. Of course, that's the parents' decision, so the parents enroll students so eventually they will have better grades and better achievements. As for November 2020, they had around 45,000 students enrolled with them and about 990 physical centers, educational centers in more than 100 cities in China. So basically the subjects they offer is English, Chinese, physics, chemistry, mathematics, and more. Now to make sure the material they teach and the quality is good enough for the students, they are trying to hire excellent graduate students and they give them ongoing training of how to teach students. And of course, they improve their teaching material accordingly to the feedback they get from their students. In addition, they have in-house content development and they also hire external advisors that will help them build their educational program. Now, from what I read, and I didn't know that before, but now I understand that in China, the need for after-school teaching is much more dramatic than other countries, and that because the Chinese culture. Over there, from a really young age, they are educated to excel in school. And that because they get to a certain age when they need to take an exam that will determine which university they can go to. For anyone in every country, it's usually a big deal, but for the Chinese people, it's a very big deal. So the parents invest a lot in the children, or they try to. Eventually, they'll manage to get to a very high quality university. That's why this company and other companies that do the same thing as TAL, they operate mainly in China. They do offer some services overseas, but their main operations in China, and they are selling billions of dollars every single year. All right, let's move on to talk about some financial highlights so we will understand what this company is capable of when it comes to earning money. So I've summed it up to a few points, and let's start with the revenue. I'm talking about the full year results right now. The full year results of the year 2020 were $4.5 billion of revenue. That's an increase of 37% since last year, which means between year 2019 and 2020, they managed to increase the revenue by 37% to $4.5 billion annually. At the same year, in 2020, they had loss from operation of around $400 million. That's compared to $137 million that they earned in last year. Now, it's important to know they had this operating loss because if we see the revenue increase that much and we see an operating loss, so we should ask ourselves why, and I'm going to talk about it further in the video when I'm going to consider some risks about this company. Now let's move on and talk about the cash flow. Their cash flow was positive for the full year 2020 and the year before, and for 2020 it was around $1 billion. So if they earned around $3 billion in 2020 and they managed to keep around $1 billion cash, that's around 30%, and that's pretty decent. Now when we look on cash from operations, it's always important to also look how much this business need to invest back, which means I'm talking about capital expenditures. And for the year of 2020, it was $245 million. That's compared to $187 million for the last year. So they still managed to keep around 70% of their cash from operations. That's free cash flow that they can do whatever they want, which means what I'm trying to tell over here, this company knows how to generate enough cash that helps service their debt, which they don't have much of it, but it still helps, and they can reinvest it in the business. And a business that knows how to generate cash by itself will be less dependent on external cash sources. And that's pretty important when you look on a company. Now, the last thing that I mentioned that is important is the gross profit. The gross profit for 2020 was around 50% as well. And also, that's great news. And I'm going to talk about it later on the video, why it's so important they have high gross margins. Now let's move on and compare TAL to two other companies, which are EDU and GOTU. Those two compete on the same market share, which means they share the same addressable market. So when it comes to ratios, TAL and EDU are leading the way, and gross margins are pretty similar, but GOTU has a higher gross margin. When it comes to revenue and cash flow, again, TAL and EDU are pretty the same, but when it comes to growth, we have over here the compounded annual growth rate for the previous 5 years. For TAL, which is 48%, EDU is 22%, and GOTU is not long enough over here to have this kind of record, but also the revenue year over year, TAL has high growth rate relatively to the others. I'm not considering this 147% because GOTU doesn't earn as much as TAL. If you can see over here, it's $4.5 billion and 1.2, which means GOTU had revenue of $600 million last year compared to around $3 billion. They are not in the same maturity level of the company. So I'm going to move on. So I usually evaluate companies by using the price to sales ratio, which is one of the ways to use the relative valuation method to come up with a price target to a company you're looking at. Of course, you can use many other ratios like price to cash flow or other ratios, but I think price to sales will be okay. Now, normally tech companies deserves higher valuation since they have higher growth rates and most of them manage to keep a lot of cash of what they sell. So although TAL is not under the tech sector, they still have some common traits they share with tech stocks, and let me explain. Like I said before, they have very high gross margins, around 50%. That's something we usually see that a tech stock has. Now, those high margins help the company to pocket a profit without trying that hard to do so. But that, of course, depends on the operating expenses, and it really changes from company to company. Over here, we have very high operating expenses, so they don't have profit, they have loss. But assuming sometime in the future they will manage to keep the operating expenses at a stable level, as long they will increase revenue, their profit will grow almost in the same phase. That's relative to other companies with very modest gross margins. Those other companies need to sell a lot. I mean, they need to have a lot of revenue to increase their profit by a little bit. Now, tech companies are also characterized by very high compounded annual growth rates, and over here we do have very high growth rate of 48% for the last 5 years, and they are just grew year over year of 35%, which is pretty nice for the company. Now, this company is expected to grow to around $6 billion by the end of 2021, $6 billion of revenue, but I'm not sure it will happen. I mean, I don't know who's sure about that, because right now there is the whole regulation thing that makes the stock price drop, but we'll talk about it soon. My bottom line over here is their growth trajectory and their ability to pocket profit on each dollar they sell, and the fact they are cash positive without big amounts of debt. They have around $200 million of debt. They used to have price to sales of around 20 before the price started to drop after the regulation fears got more serious. I think they deserve to have price to sales of 10, and that's because what I said before, they have the ability to generate cash by themselves, they have very high gross margins, almost no debt, which means the risk profile over here is not high, and at the same time they are growing pretty fast with more than 30% year over year and compounded growth rate over the last 5 years of about 50%. That's pretty impressive, and I'm pretty sure this company don't deserve just price to sales of 3. So why their valuation is so low relative to their fundamental abilities? The answer is regulation. There is regulation that's supposed to be effective from September regarding to how the teaching process will be. The Chinese government are trying to prevent from all the after-school teaching companies like TAL, they're trying to prevent from them to keep doing what they do. And from what I've read, the main reason for that is the Chinese government trying to control what the children are learning. They don't want them to be exposed to subjects that are not aligned with the Chinese culture or the Chinese idea. Another thing is that the Chinese government say all this after school teaching just puts overload on the parents with more expenses that they want. And at the same time, the Chinese government don't want the parents to have much expenses because their main focus right now is about they want to expand the population. They've just allowed to let every family to have more than 2 children, and they think that all this after school teaching that makes the parents pay more will make the parents more financially stressful, and therefore they will avoid having more children. So those are some reasons I've heard about the regulation. I'm not sure how much they're accurate. I just know that the Chinese government don't like the idea of the after school teaching. And the question everybody asks is, what will be the revenue impact? I mean, if TAL was forecast to sell $6 billion by next year, what should be the adjusted forecast for the regulation? So some analysts say 70% down or 80%, which is pretty severe, but no one can ever know. I still chose to dig in and think about this situation because I've seen some situations about regulation that usually people are overreacting, and there might be a chance that the regulation won't be that bad as it is. That's just speculation that I'm taking, and of course that's a risk. But what just happened so far is the stock price had declined by around 70%. They are trading at around $25. 2 months ago they were $90. I think the stock already got punished, and even the revenue will decrease next year by 80%. That's exactly the price they should be trading on. Maybe $20, maybe $15, $25, but not less than that. That's why I think there might be an opportunity over here, but again, a risky opportunity. Now, there are more risks to consider about this company, and basically one main risk is competition, because what we see over here is there are some educational companies that try to sell after school teaching, but it's very hard to distinguish one for another, which means when I look on TAL, I don't see anything different that they do from other companies. Maybe I don't recognize it because I don't know the industry well enough, but I don't see them do anything special. And when you don't do anything special, that means you need to market your product aggressively. And that's what we're seeing over here. Their operating expenses increased by around 30 or 40% between 2019 to 2020. And almost all of the increase is mainly due to higher marketing expenses. So that's a risk we should consider, the lack of distinguishment. So to sum this case up, like I said, the regulation might be better than it is or maybe worse, but I think the stock already got punished. I think the upside is very nice and the downside is limited at this point. But I do know one thing, unfortunately, there is no option to wait until the final regulation is very clear to anyone, because stock price tend to move before the news is out, and therefore decisions need to be made before the regulation is getting clear, which means that's a pure speculation. Alright guys, that's it for today. Thank you for joining me, and I'm going to see you in my next video.